So, I know there are a lot of you out here that are mindlessly dumping money into 401ks and IRAs without actually knowing how they work and what they are and really what benefits they provide, as well as the detriments, right? So I want to make this as an introduction to the concept of tax diversification, because usually when I sit down with somebody and I say, hey, you need to diversify with regard to taxes, you have no tax diversification, they have no clue what I'm talking about, right? So I wanted to provide a very basic understanding of the concept of tax diversification and why it makes sense to be diversified with regard to taxes. So you've got pre-tax investments and post-tax investments. You also have taxable investments, right? So all these accounts that you hear about, brokerage account, IRA, 401k, 403b, annuities, Roth IRA, and insurance, cash value life insurance, all these different accounts, they're all housing places for investments. And just because you have investments like stocks, bonds, mutual funds, ETFs inside of those accounts, the government gives a certain tax benefits. So the most common one is called the 401k. The 401k is pre-tax, meaning every dollar that you put into it, it is deductible from your taxable income in that year. Meaning, let's say you make $100,000 in the year, you put 20,000 of that into your 401k, you can deduct that 20,000 from your taxable income, and you're only going to get taxed on $80,000, right? But because you didn't pay taxes on the front end, it's going to grow without being taxed, which is great for the compound interest, right? That's the benefit of using a retirement account versus a brokerage account, which is getting taxed every year at that, capital gains rate. So it helps a lot not being taxed every year on the accumulation. But once you start to distribute that money, once you start taking money out, withdrawal in retirement, that's going to be 100% taxable to you at whatever tax bracket you're in at that point. So if you build up $1 million in your 401k and you end up in a 30% tax bracket, being very simple here, 300,000 is going to go to the government, 700,000 is yours, right? I liken this to being taxed on the crop rather than on the seed, right? I give you a tiny seed, you plant your tiny seed, it grows into a crop over the next 20, 30 years. A 401k is being taxed on the crop. A Roth IRA or a Roth 401k, anything with Roth in front of it, or cash value life insurance, the rich man's Roth, is taxed on the seed, so that when it grows into a crop, that's all yours, right? It's 100% tax free. You already paid taxes on the front end, right? You made 100 grand, you put 20 in your Roth, you're gonna get taxed on that 20 grand. You're gonna get taxed on your full 100 grand. You cannot deduct your contributions into a Roth or after tax vehicle from your taxable income. It's after tax money, right? And because you're funding it with after tax money, it can grow tax free, and you're gonna have access to it tax free. So if you got $1 million in your Roth, that's $1 million. That's all your money, right? Why is this so important? It's because we know where taxes are today and we know where they've been in the past, but we don't know where they're going to be in the future. I have a big hunch of where they're going to be in the future because I do agree with most economists, and most economists believe that taxes are going to have to increase in the future because the government's in a lot of debt. Only way they're going to get out of their debt is to decrease government spending or increase government income. Not much room for us to decrease spending. And of course, we can always hope and pray that they only increase taxes on the one percenters. But history has shown that they get most of their money from the middle class. So we have to prepare for that, right? And how do we prepare for that? We diversify. We don't put all our money pre-tax, because if we put all our money pre-tax, the government is going to decide how much of our money they want to take from us, and we have no control over that, right? If you've got some pre-tax and some post-tax, you've got more control. You can decide what tax bracket do I want to be in every year, right? How much income do I take from these vehicles so that I can control my tax bracket and decide how much money I want to give to the government in any given year, right? So we've got to not just think about your tax burden year to year. We got to think about what are taxes going to look long term in retirement, right? So the tax diversification is extremely important, can save you a boatload of money down the line. And most of my clients plan to increase their income. So it doesn't really make sense to defer taxes when you're in the lowest tax bracket you ever plan to be in and postpone them to a time where you're in a higher tax bracket, right? Doesn't make much sense. The time where pre-tax 401ks worked well was when we planned to make less money in retirement. Nowadays, most people are not planning to make less money in retirement. One, a lot of people aren't paying off their home, so they still have their mortgage in retirement, right? Two, every day's a Saturday in retirement, right? There's no more work 5 days and then you get your weekend to spend money. every day's a weekend. So what do we do on the weekends? We spend money, right? We find things to do. We enjoy life, and that's what happens in retirement. So most of the clients I'm working with, they need at least 100% of their pre-retirement income. They're not planning to take a pay cut, right? So these are extremely important concepts to understand, and I'll definitely go more in depth with this concept, provide some visuals, but just wanted to provide a very basic high-level view of that concept of tax diversification. And as always, if you want to let your learning turn to knowledge, then, watch this video and go about your life. You're probably going to forget most of it. But if you want to if you want to make your learning turn to action, which is how you actually, become wealthy, you take action with the knowledge that you learn, hit me up. Hit me up. Let me know if I can be a resource, if you want to go more in depth, if you want to see how can I take this concept and take action with it for my specific situation. It's what I do for a living, so hit me up. But yeah, hope this added some value. Hope you guys learned something, and it's all love, guys. Look forward to the next video.